Welcome to the coffee shop, everybody. I have a lot of messages to get to and a lot of notifications to catch up on. So I think what I'm going to start doing is doing a quick little playlist. I just created a new playlist in this YouTube channel, and it's going to be called the Q&A sessions, where you guys come into the coffee shop and I address the questions directly that you have. All right. Now, there's a few questions that are in this particular video. I want to address them, and I'll try and get through them really quickly because this is the second time I'm recording this video, and the first one was 45 minutes. So I know you guys don't have that much time. So let's get into this. So some questions came up related to a couple of things, both related to the RSI formula video and the CSC Harsey versus the Ikaneshi algo. And I want to cover those questions with you real quick. Now, question number one, does it matter what time frame we're trading on for this? What they're talking about is the RSI formula. No, the time frame does not matter. The RSI formula is always the same no matter what it is. But obviously, the longer the time frame, the longer you're going to have to wait to get out of your trade into your take profit. So what you do is, I would say that anything over a 1 hour time frame, you don't generally want to do that, because then you're getting later and later into the swing trading strategies. And the RSI formula, while it may work, there is too many things that can take place in the time frame of an open and close of a single candle. You're talking about 2 hours, 3 hours, 4 hours, or even the daily. There's a lot of stuff that can happen in the news, in the media, and with companies that you're, buying stocks in, right? So you don't want to fall prey to those inconsistencies. Do the RSI formula up to the 1 hour time frame. Now, if you end up with a 1 to 3 point whatever risk reward ratio on a 1 hour time frame, you have to understand that you could be in that trade for a couple of days. Easy, all right? But you could end up gaining 12%, 15%, 20-something% in a single move. At that point, you could just walk away for the rest of the week, all right? So that's question number one, right? Now, the other thing about doing this in other time frames, while typing out the answer to that question, I realize there's another answer to that question. You do not want to use the RSI formula when you're dealing with markets that are, well, let me put it this way. I was going to say that you can't use it on markets that have a gap up and a gap down. Now, if you deal with Forex, or you deal with what do you call it? If you deal with Forex, or you deal with indices, or, S&P, stuff like that, anything that has a gap up at opening day, gap down at the closing of the day, or the reverse, or even if a gap up and down because, the entire trading floor went to lunch and then they're coming back, and those previous orders that were put in place during market session closing, you don't want to use the RSI formula in those time frames. Here's the key. If your trade has not closed yet, market session is about to close, okay? If the RSI formula told you go from X to Y, session is about to close, you get out of your trade and take your profits and walk away. Because during session closing, okay, during the closed session, orders have been put into place, and those orders have not gone through yet. When session opens, there is usually, well, not usually, but every time, there's always a huge move, a massive amount of volume going in one direction or the other. It is just because all of those orders are being processed. It doesn't mean that there are that many people ordering at that time. They've all placed their orders spread out over an hour or two. And now they're all getting processed at the same time. So the RSI formula becomes null and void. It was working off of previous information, and now going forward, the information is changed dramatically. So again, use the RSI formula, get your take profits, but get out before session closes and take your profits and walk away. All right, now, do we calculate the RSI formula? Question number two. Do we calculate the RSI formula on the open or close of the candle? My friends, this is to all of you. Understand something. I'm only going to give you indicators and information based off of no repainting. Do not repaint. That is a formula that goes into the calculation of the code every time. I do not want repaints, okay? because whatever the indicator told you when you saw it once, it should tell you the same thing every single time. So the answer to that question is always, always, always the close of the candle. And that is reference to whether you see a exit long, exit short, a range, a buy or a sell indication, whatever the plot is of your moving average, everything. Everything is based on the close of the candle, okay, or the close of that time frame that you're on, right? So it's on the close of the candle. Now, also because I want you to be able to look back. Like, let's say you here. Let me find a rally real quick. I know I did this before, right? You show up, you open your charts, and you're looking here, right? All of this already took place. All of this hasn't happened yet. You want to know how much further is this little bit going to go? Is there enough for me to get in here? Well, if you look back here, you'll see that the RSI, this was your entry way over here. And there was so much movement. I mean, really, there was so much movement. The RSI actually read 59.11. That is a 1 to 3 point something. And if I do that real quick, that's basically from there to here, and I go like this. I'm doing this from far away, zoomed out. I'm doing it on a rough sense, 1 to 3 point something, right? Okay, 1 to 3.5, whatever. That's like over here, right? You looked at it here. How far is it going to go? Well, what if you look at it here? You should be able to know that it's going to go even further, okay? So it's based on the close of the candle, so that information is always the same no matter when you look at it. Now, does the entry candle and the Heikin Ashi candle have to match crossing the 50 EMA and the RSI 50 level? Now, what he's talking about is this. Let me put up a 50 period EMA, right? It's this yellow line here. You can see that here on this candle, the RSI is above 50. The Heikin Ashi level is crossing the 50 oscillator level, the midline, and it crosses the 50 here, right? Okay, this is a good entry. That's okay. Let me find another one where it's not crossing the 50, but it's a good move up, right? Here. This candle's the doji candle. It doesn't even open on the 50. It doesn't even touch it. But obviously here, this is a voluminous candle, right? Nice engulfing candle. Eats all of these three. And you can see that price clearly rallies up after that, right? And even again here, you can see here that the Heikin Ashi candle here and here are touching the 50 and above the 50. But here, they're not touching the 50. And price moves up, right? Why? Because all you're looking for is volume. You need to understand the Heikin Ashi candles inside the oscillator, the only thing that they are doing is simply representing what your RSI is doing at that moment, right? So if your candles are, here's your low, your low, your low, higher low, higher low, higher low, you can see that you have an uptrend. Higher lows, higher opens, higher closes, higher highs. You have an uptrend. That tells you your RSI is moving up. So with that, you don't even need the RSI. You can do all this without the RSI. You don't have to have it. I choose not to use it because primarily I want to see if the Heikin Ashi is crossing the midline or crossing the moving average. That's what I want to know. But one way to know whether your price is overbought or not is put on your RSI and look at your candles. You see how the open is above the RSI, barely touching the RSI, above the RSI. The open of the candle, bullish, going up, is above the RSI. This, all of this is overbought. It's overbought. This here, this is oversold. This is, I don't want to move that. That's my order block. Okay, this is oversold. It's a demand area. This is oversold. You don't want to be in either one of those moves. So do not enter on any candle, any Heikin Ashi candle that is not opening below the RSI and closing above the RSI. I'm sorry, that is not opening below the RSI, okay? If it's opening above the RSI and it's bullish and everything's uptrend, then it's overbought. If it's opening below the RSI, okay, if it's opening below the RSI, moving down, and closing below the RSI, it's oversold. 9 times out of 10, that's either a range or price is just doing nothing. You know, no one's interested there. It's just the end of momentum. Now, does the entry candle have to be crossed the 50? No. Okay, so let's talk bullish. Did that? Okay, so question number 4. Now this is a complicated question. I want you to follow me on this. Once price has crossed the 50 period EMA, okay, price has crossed the 50 period EMA. Let me get my little thing here. Price has crossed the 50 period EMA. This one, right? I see where you're talking about. Once prices cross the 50 period EMA, can we enter the trade again if the Heiken Ashi candles have reset, crossed the RSI 50, and then crossed again when price hasn't crossed back yet? I think I understand what you're saying. All right. Now, if you have your settings right, the Heiken Ashi candle will cross the 50 will cross the 50 almost every single time. If it's moving up, will cross the 50 every time it crosses the 50 period EMA. It will cross the 50 midline. All right, that will happen over and over again. Now, if you're going bullish, only 2 things can happen. Your RSI crosses below the 50 and starts crossing above it. The only time that your price is not crossing the 50 period EMA again is if your Heiken Ashi is now crossing the 60. So understand something here. You may not have caught this in another video. The 50 level on your oscillator is an entry for a long. The 60 level on your oscillator is an entry for a long if you're going up. And the 40 level is an entry for a long going up. And it's the reverse going down. You can do that. As a matter of fact, here's a clear evident point of where you would enter going short. Why? Because it's all determined by what your RSI is doing in relation to your moving average. RSI is below the moving average, right? Your Heiken Ashi has crossed the moving average and the 60. This is a move to the downside. You were in an uptrend, so you scalp down. Where do you scalp down to? The previous swing low. You get in here. You go to your previous swing low, which is right there, right? Previous swing low. I'm looking for the last time the RSI dipped down with a nice Heiken Ashi candle, right? You got one here, okay? And you've got one here. I wouldn't count this one because price clearly broke through it going the other way, but price didn't break through this one coming this way. So I'm going for this one. And sure enough, this is a 1% move. Boom, right there, gets you right through it. And you get out. Look where you get out. Right on that wick, right here, on this little business right here is where you get out. So crossing the 50 and crossing the EMA, no, they do not have to. If price crosses the 50, like here you go, RSI has now come down. You were in this rally moving up. You were in this rally moving up, right? And you got out of your trade because you listened to the algo and it told you get out, right? Now, RSI crosses below your moving average. You got clearly a downtrend, lower highs, lower lows, and the RSI falls below your moving average, falls below your 50 period. But you do not enter a long position here. You do not. Do not follow the RSI formula because this is now a range. Why? The moving average also has to cross below the 50 level for you to consider taking a long trade. If the RSI does not cross below the 50 in a downtrend, but your RSI is now moving back up, then all you need to do is this. You need a candle crossing from below your moving average and closing above the moving average. You can enter there and now just do the reverse. Go to your previous, like I said before, go to your previous swing high. There's your swing high, right? You're in a range. When you are range trading, you're looking for the previous swing highs and swing lows, but they have to be clearly defined swing highs and swing lows. How do you find those? Open above the 60 going up. Open below the 40 going down. That is a swing low. This doesn't open below the 40, so I don't necessarily take this as a swing low. I take something further back, much further back, as a swing low. So if I did that here, let me see. I'm going to take the close of this candle as a swing low, and I bet you if I delete this support level, I can move that short trade that I set before, I can move it to here, right? Where's that short trade? Where is it? Here it is, right here. Remember that short trade I just kind of fictionally did? Move this all the way down to here, all the way down. Oh, no, that's not it. That's not it. It's this one, right? Move this short trade down to here. It bypasses this whole thing. I don't lose anything there. And what happens? Price is moving down. This is a swing trade. This is a major swing trade. All I'm seeing right now is that price is just gonna, all this momentum is done. Look what's happening. The 200 is now above the 50. Okay, that's a massive move. This is just falling down now, and you're gonna fall down to this, catch 3%. It's just a long move. Okay. I should leave that in there so I can do another video if it's showing up later on. Anyway, so once prices cross the 50, can we enter the trade again? Yes. If the RSI also crosses the 50, it has to be on the same side. I'm sorry, if the moving average crosses the 50, yes. Otherwise, you scalp. If the moving average of the RSI does not cross back down below the midline, then you scalp. If it does cross below the midline, then you go long. Use the RSI formula. Use your regular ratio, whatever you do. Now, how do you determine counter trend tradings? I think what we're talking about is where I mentioned you have to subtract 1 from your formula. Correct me if I'm wrong, right? You're subtracting 1 for support and resistance levels, for trend lines, for supply and demand zones, and moving averages. Okay, and that's if you're doing a counter trend trade. Maybe I can find one. Let's see. Here, maybe? Nope. Where? I need a counter trend trade. How about we go? Well, counter trend trades, again, you simply go to your previous swing high, or you go to, now you're going to like this, all right? You go to your previous swing high, or you go to the next line on your oscillator, for example, all right? You see that I'm clearly in a downtrend right here. The 200 period, red one, is above your 50 period, right? Here, you have a Heikin-Ashi candle, okay? It opens below the moving average, closes above the moving average, and the RSI has just barely broken over the 50. So this is a counter trend trade, okay? You could take that candle and go to your next line. What is the next line? You either find your support and resistance levels, which is your previous swing high right there, okay? You can catch that or catch your 200 period moving average. If you went to your previous swing high, you would catch that all the way over here. Wait, where's it go? Over here. Your swing low would be your swing low way over there. Now, again, counter trend trades are difficult. You want a real swing low, something that opens below the 40, opens below the 40. None of these are opening below the 40. This one does. This opens below the 40, right? And there's that swing low way over there. Now, that's a true stop loss, right? There you go. And you didn't get stopped out. If you went for your previous swing low, you would have been stopped out. The one previous to that, you would have been stopped out because this candle does not open below the 40. This one opens below the 40. It's the last one that opened below the 40. You want the low of that candle. There's your swing low. So how do you determine counter trend trades? Very carefully. All right. For that, you only scalp. I would never do an RSI formula here. You scalp and you go to your support and resistance level, your trend line, whatever. You stop at one of those and you get out of your trade. Okay. Hopefully that answers your question. Now, I got 2 questions from Harry Hunter. What is the stop loss you use for swing highs and swing lows? Stuff like that, right? I just barely covered that in the previous question, but he's talking about how do you determine swing highs and swing lows when you are trend trading, right? So obviously I am in a trend right here. Okay, I want to know where is my stop loss. Okay, easy enough. Let's say I'm taking this one because it crosses the 60 and I'm clearly in an uptrend, right? I'm taking this. What's my stop loss? I want the last place that a red Heikin-Ashi candle and the RSI dipped down. So if you're in an uptrend, look for the V on the red candle there. Like literally, that's it. It's that simple. You want the last time that price went down and then the RSI went down and then came up. That is that candle. Now, if you're doing the reverse, if you're doing a bearish move, then you want the last time the price went up, the RSI went up, and you and then it came back down towards you. You want an upside down V. You want it pointing up, right? Here it's pointing up. My entry would have been here because it crosses the moving average and it crosses the RSI, right? It crossed both of them. So that would have been my entry candle. Real tiny little candle. I would have entered here at the high. It's a bad idea to do this because I'm already well beyond my 60. I'm below my 60 level. But I'm doing it just for the sake of showing you. Let's say you entered here because you clearly are away from your 50 period. Again, you want the last place that the RSI went up and then came back down towards you, right? That's this candle, and it happens to be the previous swing high. So you're looking for an A or a point up when you're trading bearish. You're looking for a V, a point down when you're trading bullish. That's how you determine your stop loss. When you are range trading or when you're scalping, you're doing things with really tight stop losses. Watch for divergences. It could be a fake out. All right. So I think that's it. There was one other question. Oh yeah, he did have another question, right? So for this one, I'm going to use his example. He's asking me the question basically on the RSI formula when you're going bearish. And it is, how do you determine the number, right? Because he's got a particular number. Commonly, you guys are getting a 1-to-2 ratio with the decimal point. He got a 1-to-3 and he does not sure what to do. Does he subtract the 60 or does he subtract the 50? Easy, real easy, okay? His RSI reading was 39.5. Okay, it's always the same. The formula is always the same. 50 minus 39.5, right? That's 10.5. So it's 39.5 minus 50 plus 50. You just need the sum. You need the difference plus 50. So again, 50 minus what is your RSI? 39.5. Okay, that's 10.5. 10.5 plus 50 is 60.5. So according to the video that I put out there, 60.5 is a 1 to 3.05. That's it. So your answer is 1 to 3.05. Okay. You take 50 minus your RSI, right? You take 50 minus your RSI plus your RSI. That's it. That's it. That's it. And if you end up with a 60, you go 1 to 3. Now, if you have to get through a moving average, like if I did this one, here, perfect example. If I wanted to enter this trade and go, I would seriously consider subtracting 1. So for example, here, the RSI crosses 50, right? Here, I get this. I don't really like this trade at all. Let's say that I get a 1 to 5, right? I'm going to subtract. I'm going to go 1 to 4 because I know I need to get through this 200 period moving average. And that's hard. That's counter trend trading. Okay. Subtract 1. You'll be safer. You did it. And most of the time it'll get you out at the top of the range there, right? It'll get you out somewhere in that space instead of waiting for all this nonsense. Okay. That's it. That's the answer to your questions. Hope that got everybody. Any other questions? Go right ahead. Ask them. You know what to do. All right, peeps. See you at the coffee shop next time.